All right, so tonight we want to start with the cedi because it has been in the news the whole of the day pretty much. Well, the local currency, the cedi continues to have a good run against the dollar on the market. It started trading this morning at around 5 cedis, 28 pesos. The impressive performance is expected to impact positively on many economic activities as steep depreciation experienced earlier has become the bane of business operations. But despite the marginal appreciation of the cedi, the Ghana Union of Traders Association, GUTA, insists reduction in prices of goods and services can't be achieved spontaneously. Charles Aite has more in this report.
President of the Ghana Union of Traders Association, Dr. Joseph Obin, says projecting a drop in prices of goods and services after the cedi's recent appreciation is premature. The local currency has performed impressively against the dollar over the past week, trading on Wednesday morning at 5 cedis 28 pesos compared to about 5 cedis 90 pesos last Tuesday. But speaking to Joy Business, Dr. Joseph Obin explained that traders would have to recoup their losses before considering any price reduction.
Then we have some losses to recoup, and if we are not being able to do all that, we factor the losses that we've made in the past into our present pricing. Unless this thing is sustained, and then in future, if we are buying again and then the price is the rate is lower, then of course this comes so natural. You cannot overprice yourself these days out of the market, and so you look at the cost and you look at the other prices in the market and all that, then you adjust yourself. So it will find its natural level. Thank you so much. Yeah.
Meanwhile, GUTA has impressed on the Bank of Ghana as well as government to check cases of holding the currency's appreciation could be sustained.
The management of your limited resources. So we then have to find a way not to allow pilfering of this out of the system.
However, the structural issues facing the country, which always leads to an increase in the amount of dollars in demand by businesses and individuals, should be tackled. This has contributed to the perennial depreciation of the cedi in the last quarter of 2018 and the first quarter of 2019. Some analysts have argued that if that problem is not addressed, then the challenge would persist and may not end anytime soon.
Well, the minority has been speaking about the cedi today. It says the recent depreciation of the cedi against major international currencies, especially the dollar, has added 15.3 billion Ghana cedis to the country's external debt stock. Now, delivering his address at a forum dubbed An Encounter with the Minority on the state of Ghana's economy, former Deputy Finance Minister Kesel Atuforsen said the depreciation of the cedi is expected to add up to the public debt recorded in cedis due to increases in the cost of debt serviced on dollar-denominated debt.
The fast depreciation of the cedi is an indication that the fundamentals of the Ghanaian economy are now just weak, but are not just weak, but have been completely depleted. The real sector is expected to suffer the consequences of the depreciation of the cedi. Things are falling apart, and therefore the projected real GDP growth of 8.8%, of which 6.0% was expected to come from the real sector or the non-oil sector for 2019, can never be achieved or cannot be achieved. The depreciation of the cedi is expected to increase the cost of doing business. Domestic businesses that rely on import of raw materials will be compelled to pay more in cedi terms for their raw materials. This will push up the cost of production, make domestic businesses less competitive, and will eventually push them out of business. It is not surprising that the several businesses are collapsing in the wake of the weak performance of our currency, the cedi. Businesses are experiencing a harsh financial situation. The overall growth assumption must be revised downwards because the expected weak sectoral growth rate cannot be supported by the overall GDP growth. Again, the investor confidence is gradually weakening as uncertainty has increased, and this is affecting the real sector. At the end of the year 2016, investors bought the US dollar at an interbank rate of 3.9 per dollar. Today, the same investors are compelled to buy the dollar at an interbank rate of 5.6 cedis per dollar. The depreciation of the cedi has overburdened investors with unexpected costs, and their cedi cannot purchase as much as before the external market.
All right, so that was Kaysola Tuforce speaking earlier in the day. We've got a response from Government. Information Minister Kojo Oppong-Nkrumah says the current performance of the cedi is an indication government's intervention to control its depreciation is working well.
The purpose of their presentation today essentially is that the cedi has depreciated and that importers have taken a hit. Now, this is an already acknowledged point, and government has already been working to address the situation. The Bank of Ghana outlined its short-term measures. The finance minister outlined the medium-term measures, and today you are beginning to see a gradual recovery of the Ghanaian cedi. We expect that these recent efforts, in addition to efforts like the successful issuance, as well as some of the other medium-term items that have been outlined, will lead to an eventual reversal of the recent shocks that the currency has suffered. So the cedi is gradually making a comeback, and this minority attempts to take political jabs is a bit late in the day. The third brief that we have for you is that the Vice President, accompanied by his spouse, has completed an official visit to India, where he participated in the 14th Confederation of Indian Industries Exim Conclave on India-Africa Partnerships. He was a special guest of honor for the inaugural session, and he uses it as an opportunity. Ghana yesterday successfully issued $3 billion in a single transaction of 3 tranches. The government's consideration that this is a vote of confidence is founded on 3 major pillars. The first is that the nearly 7 times oversubscription of the Ghana request is evidence of the growing global confidence in Ghana's economic resilience. The global investor community has, by this oversubscription to this magnitude, signaled their faith in Ghana's new ability to churn out very strong returns on investments and consequently service our obligations. Additionally, it reflects a robust investor confidence in Ghana's future economic outlook. During the process, as I'm sure you have followed, bids submitted exceeded over $21 billion when we were looking for only $3 billion. You can compare that to the $8 billion in bids recorded in 2018, and it tells you how much appetite is growing for investments in Ghana's money market instruments.
Well, so the politicians have been talking, but what do the experts have to say about what we are seeing, what appears to be the city's recovery, and what the future holds? Well, economist from Data Bank, Courage Mate, the guy you see behind me, has been speaking to us. Let's listen to bits of what he has to say.
Beyond a certain point, the depreciation started to reflect panic buy and speculation. Right, so that just by virtue of the news coming into the market that some inflows are coming, the speculators are beginning to take profit and dump the US dollar in favor of the cedi. And then the cedi is looking more attractive now and gaining. So this regaining or correction is an elimination of the speculative forces that were built into the exchange rate. And we will continue to see this until we fully eliminated the speculative tendencies within the exchange rate.
So what's going to be the outlook for the next few months?
Well, I think over the next few months, once we have fully eliminated the speculative forces, we should see stability. In fact, till the end of the year, once we've eliminated it and it's gotten to the point where speculation is out, we should see the cedi remaining within a very restricted band till the end of the year.
Well, economist Dr. Nimoy Thompson has advised government to cut down on what he calls wasteful spending if it intends to find an immediate solution to the woes of the cedi. Now, although the cedi appears to have started to show signs of stability against the dollar this week, Dr. Thompson believes it might only be temporary. For immediate and lasting solutions, he believes that the government should control its spending, which drives demand for import. He spoke on the Super Morning Show on Joy 99.7 FM.
an average of 918 million Ghana cedis per month in form of salaries. This year is projected to pump in just over 1.2 billion Ghana cedis per month. And we don't have the productive capacity to meet the demand that these money then lead to. So what happens? We import everything. So it's important in the midst of this crisis. Of course, this is an age-old problem. It's nothing peculiar to this government, but it's become more pronounced in the past 2 years. And so if we are going to deal with the problem, the first area to look at is government spending. This business about Eurobonds and traveling all over the world, you may or may not get what you want, but at least you have control over what you spend and how you drive demand for imports. You add to that the spending on goods and services and others. So that's one area that the government really, truly, for immediate effect, needs to send maybe a memo to every minister. Cut down on non-essential services. Certainly, wasteful spending must be brought under control.
All right, so that was Dr. Nimoy Thompson. We are going to get some more explanation from him because he has released a statement and some graphs we want to go through concerning how the city has been performing and making us understand what has been happening over the past few weeks. Joining me in studio is my colleague, Norvan Akwa-Hayford. We want to begin first, Norvan, with how the city is faring at the moment, because we are told that it started trading at 5 cedis 28 pesos this morning. Where are we at the moment?
Okay, well, currently we are at 5 cedis 27 pesos. That's where it is.
Actually, that means it's gone down.
It's gone
people
down.
are saying that's a miracle, sort of, because we're having around 5 cedis 60 something pesos some 3 days ago, and now we are seeing this.
It's surprising. You remember it went up to about 5 cedis 85 pesos, almost at the 5 cedi 90 pesos, and then we've seen it drop drastically, to where it finds itself as of now, as we speak. If you check, it's around the 5 cedi 27 pesos, and I think that is good news. The market has been reacting after the finance minister made that statement in Parliament that look, within 2 weeks,
it's happening.
We will be able to see the city.
But the question has been whether or not this is going to be sustained over the period. Some are saying this is just temporary. But let's turn to our graph tonight.
Yes, this is what you see, and this is supposed to be something that is giving you how the city has performed against certain currencies on the continent, that is in Africa here. And you are comparing that to the Kenyan shilling, you're comparing the city to the South African rand, you're comparing it to our own neighbors in Nigeria, the naira. And if you look at from 2000 to 2017, if you look at the index, you can say, per this graph, the city is a blue graph that you see
going
down.
We were at our weakest in 2017.
In 2017, I mean, that's what you see over there. And then you see the naira also, performed, some way, somehow. You see that of the South African rand and then all that. So
but what we see generally is that there's a downward trend for some of these other currencies here in Africa. The Kenyan shilling, the South African rand, they were all going down at a point. And I think that with the that's the South African rand somewhere in 2017, it started to rise up again.
But you see, what you see, even currently, you could say that as of 2017, end of 2017, the Kenyan shilling was stronger than these other currencies. The South African rand had its own hit, not to talk of the naira. But as for the city, it was just going down within that period, 7-year period. You saw it going down as it is. And Dr. Nimoy Thompson is saying that, listen, this is a currency that within the continent, you remember what Bloomberg said 2 weeks,
the cheapest
week or two,
in Africa.
It was the cheapest in Africa in terms of it trading, but at least we've seen some turnaround, if we want to put it that way. And that turnaround is what we saw within just the last week, or the few days from Monday till today, after the finance minister made that statement in Parliament. Of course, after we had hit 5 cedis 85 pesos, today 5 cedis 27
Let's
pesos.
take a look at the next slide, shall we? So basically, what's he saying? What point is he trying to make?
Well, he the main point he has made is until government cut its spending. Of course, if you cut the spending, you will be able to deal with some of the challenges that we have with the city. So it's not only about the fact that we are import dependent as a country. We need to move away from the import thing. But then he says the symptoms goes beyond just the fact that we must be able to export. Even if you turn your economy into an export one, and then look at the structure of the industries that you have put in place. Because one district, one factory, if you're going to have foreign companies come in here and set up, and your raw materials and all these things are still going to be imported, and these companies, they export the product, what is going to happen? These funds will be repatriated.
So he says that when the wage bill outpaces revenue growth, you're looking for trouble.
Exactly, because we are spending so much. And some have said that, look, you know what? Government is hoping to come out of the IMF program and probably decide to employ more. And he's cautioning against that. Be careful. He gave an example somewhere, I think in 2010, thereabout, where you had the then Bank of Ghana governor insist that government was not going to spend beyond whatever limits that they have been given. And so they had to stay within that limit. And he said that was the period that there was a recovery over 2%, which was something that had not happened in a very long time. So he feels that, look, let government itself stay within its spending limits. And if you stay within it, why not? You are sure that we will be able to overcome this challenge.
Do we have another slide to show?
Yes, I think there's a last one that you will see trends in capital spending, domestic financing, and he sort of shows you how we've been spending over the period. And he feels that if you look at the budget itself, that's the blue figure, how we've been going on and on, the actual nominal prices, and then the actual prices, that is the ash one. And so he feels that, look, basically, if you want to deal with the city issue, we have to go beyond just thinking of...
All right, I'm told that we have just 30 seconds to wrap up. So what's the point he's making? Where do we go from here?
Where we go from here, Darrell, it is cut your spending as well. So as we go into, we're going to go into an election year.
Yeah.
And a lot of the time, governments spend a lot because they want to meet promises. They want to ensure that people will vote for them. He's cautioning against that.
All right. Novan Akwahefo, thanks very much for that perspective. Very grateful for that. Now, you're still watching Business Live. It's a Wednesday, so we get to bring you the Joy Business Van. Now, Gideon Denjo is on a mission to change the pessimistic view about products made in Ghana. He's doing that through Gideon's, his footwear company. This Ghana month on the Joy Business Van, we bring you the story of this young entrepreneur who is creating business for local craftsmen. If you were not told, you'd think these pieces of footwear were made outside Ghana, maybe Italy, like a Santoni or Salvatore Ferragamo. But no, they're made in Santasi, a suburb of Kumasi in the Ashanti region, by these craftsmen who have been hired by Gideon Denjo, the founder of Giddings, a footwear company.
We started way back casually in 2009 when I was in college, University of Ghana, second year. And that time I wanted to really live a comfortable and sustainable life on campus. So I ventured into shoemaking. Why shoes is that I was introduced to a course in engineering and strength of materials, where I was introduced to a material that could be used as the soles for shoes. And as at that time, students did not really have a lot of money to spare on shoes, not to talk about even buy fake shoes. So I thought it wise to use that material that I've discovered, to be used for the soles of shoes. That could take them for more than 3 to 4 years in their state.
The shoes are carefully crafted by the artisans Gideon has contracted 6 of them.
I discovered the new material, had to travel all the way to Kumasi, and luckily for me, my brother too was in tech, so he introduced me to some few artisans he's seen around, and I had a discussion with them to tell them what I want to do, the vision and all that, and we took it from there. So the first batch we made were just 5 pairs, and luckily for me, all my classmates bought it. Then after a week, I had to order for 20. I was able to sell those ones to within 1 week, moving from one room to the other. Then I ordered for another 65. Then I sold all those ones within 2 weeks. So that was where I realized that I could turn this into something big.
Gideon works on the designs himself and sometimes upon request from customers.
So this is one of our shoes called which is a double monk strap, and it was named after a friend called Atukwe, James Atukwe. And
what's the story behind this?
The story is that guy is more like a perfectionist, and so we had to really inject a lot of color, take time, because this shoe took us close to 12 hours to make.
Wow.
Because of the painting, the hand painting and all that. This weren't black, we had to create that.
At the moment, Gideons makes 200 shoes a month and purchases have exceeded 5,000. Thanks to social media, he's been able to supply every region here in Ghana. Ghana is heavily dependent on imports, affecting local production and the economy, but Gideon wants to change that narrative through his footwear company, thus the emphasis on quality.
We have watched closely some of the foreign brands because we benchmark some of the companies, and we've realized that they are not doing so, if the gap is not that much. When it comes to quality, I think we are at par with them, and we're trying hard to make sure we inject Ghana into all our things.
Gideon is also starting a clothing line, aside from producing footwear for both sexes.
The idea is that in the next 5 years, we should be able to blow up into a very big manufacturing plant where we could even offer contract manufacturing for young brands who want to also enter into shoemaking. And I think some few months ago, I engaged the secretary at the embassy of Ethiopia to look at how best we could bring in leathers, to help our businesses.
Like every business, Gideon's has had its ups and downs, but Gideon believes he can create a big shoe manufacturing company. But that may also mean opening up his 10-year-old business to investors.